There are two big learning lessons for realtors that I really want to cover. Hello, my name is Mike Florin. I'm the owner of Low Cost Mortgage. Today's your weekly update for May 21st, 2025. All right, I've got a notepad here today so I can stay a little bit scripted with what we're going to talk about. First thing I wanted to cover is there are two big learning lessons for realtors that I really want to cover. One is we just got a file in clear to close in less than 2.5 weeks. Less than 2.5 weeks. Now, most lenders can do this because there's two main bottlenecks that you have in a mortgage loan, and that is borrower documentation and the appraisal. Those are usually your biggest bottlenecks. So, you as a realtor, if you can remind your borrowers to bring in documents to whatever lender you're using up front, quickly, immediately. Everything is right now in this industry. They're going to have a much better experience. Things are going to move a lot faster. Second one is appraisal. Now, on this particular deal, they got the home inspection done up front, right away. It was done within a day. Their resolution was done within 2 days. So guess what they did? They ordered the appraisal pretty much up front. So we had the loan contract in, disclosed that same day. Borrower was really fast on documentation, and it wasn't really a particularly easy loan, just the borrower was fast on documentation. And the appraisal was ordered very quickly. They got the inspection done quickly. And what happened? Clear to close, less than 2.5 weeks, and it was 14 days before closing, and docs are out at title 12 days before closing. That's almost 2 weeks. That's pretty good. Now, most lenders can do that if the borrower does what they do and the appraiser is ordered, or the appraisal is ordered up front. So that really helps out. Okay. Second one, this is going to be very important here. We're going to talk about inspection resolutions, and I'm going to spend a few minutes on this. So on the real estate side, you guys know that if the lender receives an inspection resolution and it states anything about the property not being in perfect condition, what's going to happen? A lot of questions get raised. A lot of questions come up. Suddenly they want to know what's wrong. I need in writing what's going on with this property. Why are they getting extra money? And in this particular case, the buyer got $4,500 of seller concessions from an inspection resolution. Now, we all know that there's a lot of realtors that are going to use the inspection resolution to negotiate slightly better terms. We know that. You know that. Everybody knows that. But what's important is what's in writing. So there's a very good workaround for this. And I've brought it up a few times, but now I'm finally putting it on a video. Here's your very important time frame to do an inspection resolution and have it work compliantly for mortgage lenders. Okay, so let's just say you've got 5 days for your inspection resolution. Yeah, 5 days, right? Well, what you're going to do is if this is that last day on inspection resolution, you're not going to file the inspection resolution paperwork here. You're going to go back in time a little bit. And what you're going to end up doing is you're going to do an amend extend over terms that you've negotiated out, roughly here, and the amend extend is going to state the following. The seller will credit the buyer X amount of money of seller concessions to be used for closing costs, prepaid items, or anything the buyer needs to close the loan. That's the sentence. You're not going to put anything before that. You're not going to put anything after that. And the main reason is you don't want to reference anything. You don't want to put anything in there that references anything other than a very specific sentence of what exactly is going on. The seller is going to credit the buyer a total of X amount to be used for closing costs, prepaids, or anything the buyer needs to close the loan. That's it. Now, if you reference anything else in that amend extend, you're going to raise questions. And those questions are going to come up, and you need to understand something on the real estate side. Every mortgage institution and every single lender is operating from a position of fear. You have to assume that. So you're going to assume that that lender is making decisions based on unknowns, and those unknowns are always taken in a negative light, and it's always operating from a condition or from a position of fear, and that is because they're afraid of getting audited by the end servicer, and they're afraid of VA or Ginnie Mae, Fannie, Freddie, VA to come back with an audit on a file and say this is an uninsurable loan or this is a bad loan. They're afraid of that because the financial penalties can be quite high. I personally know of a situation, and it wasn't my company, it wasn't our branch, it wasn't us, but it was somebody else. I was in a mortgage co-op at the time, and another branch inside of that mortgage co-op, they wrote a bad refinance. I'm not going to get into details, but they ended up losing $140,000-ish on a $300K refi. That's why you're going to see lenders, investors, everybody in the mortgage side that's on the money side, operating from a position of fear in relation to inspection resolution, in relation to title things, because they want to make sure the I's are dotted, the T's are crossed, and as long as they are, boom, 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 deal's done, we're good to go. It's within conforming guidelines, and they just push it through, and it works really, really, really well. But if it's not, then everyone's going to jump in to make sure that their company doesn't lose a lot of money. And I've seen companies lose a lot of money. Now, for us at Low Cost Mortgage, we haven't had that issue. Why? Because we double check things, right? And if anything, if something's popping up a day or two before closing, usually it's borrower documentation's really, really slow, or maybe the title policy comes back really, really slow, or the appraisal comes back later and it needs some corrections or something. And every lender is going to bump into that. So the longer those things take, more problems. Inspection resolution comes in, more problems. Now, let's talk about interest rates. Okay, interest rates are on the higher end of a range. I'm going to pop up a really good chart here, and it shows you in detail, a little yellow block that's there, shows that we're higher last week, and this week we're above that range. And the main reason is you've got tariffs that are kind of paused, but not, but there, but not, a little bit of uncertainty. You've got the new budget that they're trying to push through, and you have the Moody's downgrade of credit. Now that just happened last Friday. Let me pop open another chart real quick here, and I'm going to draw an arrow on it. That is what happened when the Moody's downgrade happened. Now, Moody's is the third to downgrade the U.S. The other two did it much sooner. But this time, it is just happening at the time where rates were on the higher end of this range, and then of course that pushed rates up just a little bit more. Again, it's that uncertainty. Now, the U.S. bond was downgraded from AAA to AA+. And the main reasons for that is our debt is too high and financial uncertainty. So once those get straightened out, then you should see everything be good to go. So for us on the mortgage end, we are only putting loans with companies that are floating down. We're not using companies that don't float down, because there's a high probability once the budget piece is passed over in the House and the Senate, once that all goes through, then the rates will return back down into the range, which should drop everyone's rates back down. So when you're looking at that rate update email, just know we're on the higher end of that range, just like everybody is right now. So if you have any questions, give us a call. Website, lcmloans.com. You can call the main number. You can call me. You can call any one of the loan officers here. Any questions at all, we can give you quick answers. Oh, rate quotes. If you want a rate quote for your specific scenario, super fast and easy. You just call, and in about 30 seconds, maybe 40, we'll have you pricing over the phone of exactly what you're looking for your exact scenario. Borrowers can call us. Realtors can call us. You could call us. Like, right before I film this, I just got a phone call. Hey, if I have a borrower that is this credit, buying at this, doing this, what is the interest rate? Well, here's the interest rate, here's your payment. It was really fast. In fact, I do it on this screen right here. The screen's always up, and it always has pricing on it, so I could just jump in, calculate it real quick, and we're good. Do we need a credit pull? No, we don't. But you do need to know the credit score. Do we need to know the exact address? No, we don't. But you do need to know roughly the purchase price and down payment. That's really all we need. Credit score, purchase price, down payment, which program are you going to use? Any lender can quote a rate and cost of rate right then and there, and they should be able to do it within 15, 20 seconds, maybe a minute.